Real estate agents have traditionally always had a challenge with paying taxes. I always go back to my very first commission check several years ago. I interviewed agents in my office to understand what they would do with their very first commission check. And what I didn't hear was invest in real estate and invest in the stock market and hire a coach and hire an admin or a marketing campaign. What I actually heard was pay last year's taxes and next month's car note. And so this challenge that real estate agents have when it comes to saving money for taxes out of every check is not a misnomer. It is not a myth. It is true and it is real, but it also is fixable. And so by implementing profit first and implementing the steps of the wealth method, you, the real estate agent, can eliminate the stress behind saving money for taxes. One of the really big questions that I always get is how much should I save out of every check? We have all these bank accounts, we're implementing profit first, but a lot of times real estate agents don't save enough for taxes. And, if we look at W-2 employees versus 1099 subcontractors, et cetera, we don't end up saving enough for taxes. So coach, I have all of these bank accounts. How much should I set aside for taxes? Well, I'm not a CPA and I'm not a tax specialist. However, in my program, I'm always going to recommend to set aside somewhere between 15 and 25% away for taxes out of each check. One of my favorite stories about a real estate agent overcoming the burden of back taxes. We started in May of 2020, and one of the very first conversations that we had was addressing their current tax issue and their back tax issues. You see, this agent had always sold, $500 to $1 million of real estate a year. However, never had a system to set aside money for taxes. And so when we started working together, that was one of the very first things that we tackled. And we implemented a system where they were saving 30% of their taxes to not only set aside money for this current year that we were in, but also started chipping away at what we earned and to pay for last year. You see, this person also hadn't filed taxes for 4 years. So we did not have a clear understanding of how much money was actually owed. So we got them introduced to a new CPA. That CPA worked with them and started implementing bookkeeping and went through year by year, 16, 17, 18, 19, 20. And over the course of the next 12 months, we were able to generate enough revenue to get caught up on all past year's taxes and set up a system to where taxes were never going to be an issue the rest of their lives. If you don't set money aside for taxes every month, it's going to cost you much more than money. It's going to cost you time. It's going to cost you energy. It's going to cost you having to sell more real estate in the current environment to pay taxes for when you might have had a greater month. For example, if you're in a soft real estate market and you haven't paid taxes that needed to be paid in a much hotter real estate market, you might have to sell 2 or 3 times the amount of real estate just to get caught back up. The stress and the penalty of not being able to buy real estate, right? If you haven't filed past year's taxes or maybe have tax liens on properties, that's going to put a restriction, handcuffs on you as you go and build wealth. So implementing profit first, implementing setting aside money for taxes from the jump, every single check is only going to help you reduce stress, reduce anxiety, and actually save you money and help you build more wealth. So when you're on top of setting aside money for taxes, it definitely gives you an advantage as you go through the year and you have conversations with your bookkeepers and your coaches and your CPAs, and you have properly allocated and set aside money. It definitely puts you in a position of power as you enter the end of the year to make tax advantage purchases, to implement some tax strategies, because you actually have the money set aside for taxes versus having to sell real estate next year to pay last year's taxes is always going to lead you to that disadvantage. So do yourself a favor, save it from the jump, 15 to 25% of every single check. And trust me, by the end of the year, you will be in a position to take advantage to actually help you reduce the amount of taxes you pay.